Next, we take a glimpse at the global economy amid the pandemic. Despite the grave and complex environment, China has shown steady economic recovery. The National Bureau of Statistics said on Monday that the country's GDP grew by 2.3% for the year 2020. It's reported to be the only major economy to grow last year as the pandemic suspends travels and many other sectors. Meanwhile, worldwide, the major investment banks and internet-related industries are reported to be doing well in the third and fourth quarter of last year. So how do investors look at the current economic reality for the year 2021? For that, I spoke to Ann Richards, CEO of global investment firm Fidelity International, who has been instrumental over the years in building gender equity in the business world. Take a listen. Anne, what a pleasure seeing you here.
It's lovely to be back speaking with you again, so thank you for inviting me.
I've been looking forward to this interview for quite some time. How you been?
I mean, it's been a very strange year. It's almost a year now that we've been working in this virtual world. But, we've managed to weather the storm, I think, and hopefully we're seeing some signs of progress beginning to come through in 2021.
We hope that will be the case. The good thing is some economies are still growing. For example, that of China, the number of China's GDP just came out, more than 100 trillion yuan for the year 2020, growth rate about 3.4. What do you make of that?
Well, look, it's a great result on the part of China, and it really shows the resilience of the Chinese economy. Of course, China led us into the crisis in a way because it was one of the first to be hit by the virus when it came through, but there were very, very strong measures put in. Also, the support packages that went in to help support business. And you've started to see that coming through with a very positive fourth quarter number. And I think what we hope is that that is the pattern that we will see in other global economies as they begin to come through this pandemic, as well as we go through 2021.
Looking at China's number, what does it mean to you, both your business and also your company?
So I think China plays such a hugely important part in the global economy that it directly or indirectly, it has an impact on all businesses pretty much because of that importance within the supply chain as much as anything else. For us as a business, I mean, we've been present in China for more than 15 years now. China remains a very important part of our long-term strategy. We are a business that tries to help people save for their future. We want to be part of deepening those capital markets in China. And so the fact that China has proven to be resilient, I think is good for our investors, and it's also hopefully good for the development of our business in China as we go through 2021.
You said earlier in 2000, in fact, you were saying that your staff will not be able to come back to the office for the normal days unless it is reaching the end of 2021. Wow, what you have just predicted seemed to really has become the picture. Tell me more about your latest assessment about what's likely to be the so-called going back to normalcy, depending on the degrees of normalcy, and what is your assessment of the latest situation?
Okay, look, so I think when I said that back in May of last year, it was in the context that there were some people were much more optimistic that we might return to a quote normality somewhat earlier in 2020, and I just couldn't see that was really likely given the unusual situation that we're in. I think as we go through 2021, it has been interesting that locations vary quite a lot around the world for us. We've seen different patterns in different countries. And we've seen some which have managed a very great deal of viral containment, actually to go back to pretty close to where we were before. I think the pattern through 2021 is still going to be a little bit stop-start, location by location. The most important thing for 2021, though, is the vaccine rollout, which is immensely positive. What you are also seeing, though, is even though I think the wider economic effects will gradually work their way through and we'll see a resumption of more normal societal activity, I think people want something quite different from their workplace. And that's what 2020 showed us. So although I think we will be returning to a more normal societal environment, I think the workplace has probably changed quite a lot, and we're still working through what that means. So more working from home, more flexibility. Those are the things that our employees, and you can see, generally speaking, business employees are asking for, and we need to work through what that means. So I think, more optimism as we go through 2021 and a new normal.
I am right now looking at you, and also the beautiful flowers you have in the background. I heard that's coming from your husband.
That was a present from my husband at the weekend. So this year we'll have been married for 30 years. 30 years.
Wow, so congratulations, Anne. Wow, that's a great testimony of it. But working at home with that beautiful flower, certainly it's a wonderful feeling. But how are people likely to adjust, to this change of lifestyle and working style? That's going to be a big question, isn't it? And how is it going to impact on the performances of companies?
Gosh, it is such a change. I mean, and I was never somebody who wanted to work from home or thought she enjoyed working from home. So I've had to go through a massive adjustment. I mean, I really do still miss traveling. I mean, I miss visiting different locations, meeting people face to face, like we did when we met. I do miss that. I miss my teams. On the other hand, it's given people more flexibility. Many of our staff have really long commutes, so being able to give them that time back to do different things in the day, I think is a positive. So I think focusing on that positive, trying to keep the good new things that we've learned about the working environment over the last 12 months, I think that's really important. Not just going back into old bad habits, but nonetheless going back into more human contact, more ability to travel and experience different cultures and different ways of doing business and learning from it. I think that's what we're keen to go back to.
And some suggest that we are at a crossroad. Probably there are more opportunities for the year 2021, not just about the solutions of a vaccine for the pandemic, but also geopolitically and also in terms of trade, in terms of business environment. As we know, we suffered quite a few years of setbacks in all of those areas. What is your assessment?
I think that there has been a little bit of a trend back to thinking first and foremost about national interests in many countries around the world, and I think you saw that in the slowdown in global trade, which of course the pandemic has exacerbated in a way. I think what's also begun to emerge is the negative consequences of that. So I hope that with this renewed sense of collaboration, which we've seen with vaccine development, I think with that new sense of sort of coming together as societies, that perhaps that will allow us to do a little bit of a reassessment on some of those geopolitics, to allow us to move forward in a spirit of collaboration with our international partners, in all regions and around the world. And I think that renewed sense of global purpose and the fact that to have an effective response to the COVID pandemic, it required international cooperation, and it reminded us of the real benefit of that international cooperation. And I think we need to remember that and build and work on that as we go through 2021.
Well said. Having talked about some of the general situation, let me ask more about some of the issues you are extremely and passionate about, for example, about gender equity. Some suggest as the economy is slowing down in such a way, unemployment is going skyrocketing as a result of the pandemic and many other factors. So these issues about gender equity, about racial issues might be sidelined rather than being focused on. What's your assessment once again?
So I think we need to be very careful. So on the positive side, one of the things that we saw is that companies which we rated more highly in general on sustainability, on environmental, social and governance measures through 2021 actually outperformed. So you saw very strong financial performance from companies that we rated better on many of those metrics. However, on the other side, and less positively, we've also seen that some of the pressure that has come through in response to the pandemic has fallen disproportionately, particularly on women and on a number of minority or underrepresented groups as well. And that is, I think, really problematic because you've seen elements of inequality exacerbated through 2020 at the same time as you've seen companies with more sustainable, more resilient business models actually do better. The most recent jobs data from the US is one interesting data point in that if you look at December just as 1 month, and one shouldn't overextend that, but of the job losses in December, all of them and more on a net basis were from women. So women have disproportionately lost their jobs through this crisis in December. So I think we need to be really alive to the fact that in 2021, we need to make sure that those unintended inequalities which emerged through 2020, that we work hard to redress them as we move back into a more cyclical recovery post the pandemic that we've experienced. And I think it is really important that governments and companies together really focus on this to try and make sure that inadvertently we don't take a step backward on the journey towards gender equality. I think it's really important.
The other thing I want to ask you, Anne, is earlier you said in an interview that everything is becoming microeconomic. Would you like to explain what you exactly meant?
Yes. So when I grew up in the investing world, in particular, fixed income markets were macro-led. And what I mean by that is we would look at what the fixed income markets, what the bond markets were telling us. We would look at the bond markets to get an assessment of what future expectations were on inflation, what future expectations were on economic growth. And this has been an increasing trend, I think, but with the advent of unconventional monetary policy, with the advent of QE, and we saw this once again in March when the central banks moved with coordination to inject liquidity into the market. Essentially, the shape of the yield curve is no longer something which tells you what future inflation expectations might be or what future growth expectations might be. First and foremost, the shape of the yield curve is increasingly determined by the central banks, by their buying and selling activity. And that's what I meant by talking about it being micro. Really, it is about the balance of the demand and supply that the central banks themselves are providing, which may be led by a macro view, but quite often is being led by different things: liquidity, solvency, that the global economy keeps functioning. And I think that's quite a difference. So that's really what I meant. It's about buying and selling at a central bank level, turning what used to be a macro series of events into something which looks much more like microeconomics.
Are you confident about the central bank's decision-making processes, particularly in a time when the pandemic has exacerbated all the economic difficulties, and we also see currencies in various countries that have been moving ups and down quite dramatically, not to mention it's going to be a very difficult economic recovery at time, even though we could get through this pandemic somewhat?
Well, I think what you've seen that in 2020 is that we've pretty much reached the limits of monetary policy. And the era of the independent central bankers effectively operating, with a great deal of independence from fiscal policy, I think there has been a growing realization that monetary policy and fiscal policy, particularly when you're responding to such a sharp economic crisis as we saw in 2020, they need to be coordinated. Now, your question around do I have confidence in the central bank decision-making process? We have a lot of very, very clever people sit in central banks around the world. So it's not so much a question of confidence in the decision-making process or not, but I think we need to have a degree of confidence that that combination of the fiscal response and the monetary response bear equal part of the load of building through this recovery. What we did get, and I think the speed of the response that we saw in March from central banks around the world was one of the great positives, because unlike after the financial crisis, it really took quite a long time to get that coordination. This time it was really fast. I think they did an awful lot that was right in 2020 and should absolutely be commended from that. They can't solve this this problem in isolation. It does need a coordinated fiscal response. And governments have done a degree of that. I'm not sure that we've quite got through to the end of what will need to be done as we really see what the scarring is like of the global economy in 2021.
Right. My final question, Anne. We have seen so much from the year 2020 and even leading to the very beginning of 2021. For example, what's happening at the Capitol in the US. Some say as the largest economy, it has becoming such an unpredictable factor. As an investor, as someone who's been doing your trade for long, what do you make of these unpredictabilities, particularly from the largest economy in the world?
Unpredictability, I've never really figured out when this halcyon period was where politics and economies were very predictable. They've always felt pretty unpredictable to me as we've gone through. And there are shifting sands around the world. I absolutely understand that, and I don't want to diminish the importance of that. But nonetheless, we have seen, I think, at an individual company level, at an individual industry level, things that really make a difference that are worth focusing on. And one of the clear things that have helped us guide us through 2020 has been that focus at an individual company level on sustainability. Those are the companies that have done better. And I think that is going to be continuing a trend into 2021. We will continue to see, and we should continue to focus on those companies that are really trying to deliver against that sustainability agenda, because I think those are the ones that are going to do better over time. They are more resilient, and that's how we try and navigate the unpredictability.
And Richards, always a pleasure. Thank you so much for your time, and all the best. Be safe.
Thank you, and to you too, be safe. Thank you very much. Lovely to chat to you.
And Richards from Fidelity International. That's all the time we have for today. If you'd like to see more, search us World Insight or check out our YouTube channel. Follow us on Twitter and Facebook. I'm Tian Wei on behalf of the team. Thanks for watching and